Hello everybody, my name is Doug McKay, the Anti-Wall Street Guy. First of all, I would like to thank you guys for visiting our site, and please feel free to sign up for some of our free videos, teleseminars, and various workshops. And what we're looking at right now is a chart of the S&P 500 cash, $SPX, and I removed a lot of indicators. I like to keep it very simple here. So what I'm going to do as we go through this introductory video is I'm going to go through the difference between why I am the anti-Wall Street guy and the difference between me and the typical Wall Street guy. You know, the typical Wall Street guy has always said, you know what, Mr. and Mrs. Jones, the market always comes back. And you guys, we can see by looking at this chart, when we put a high in the S&P back in October of 2007, where my pointer is here, all the way down to the March lows of 2009. You certainly wouldn't want to buy and hold there. Live on the radio, we were out of the market, everything, at 1200 on the S&P in 2008, and then we entered the market live on the radio for the first time in March of 2009. But in any event, the biggest difference between myself and your typical Wall Street guy is obviously we don't buy and hold, we buy and sell. Most Wall Street guys, typical Wall Street guy, is buy only mutual funds. We buy and sell. And I would never, ever sell or basically indicate for someone to get into a mutual fund. We use exchange traded funds and individual stocks. I would never tell anybody to buy and hold. You're in for the long haul. I really, really believe those days are over and those days are dead. Most typical Wall Street guys deal in equities and bonds. You guys, we deal equities, bonds, commodities, and options. You should check out our options and commodities link there. Pie charts. I would never ever hand anyone a pie chart. We use technical analysis videos that are sent out to our clients on a weekly basis, and those individuals that self-manage their money get our screen captured compressed videos 3 to 5 times a week. I never like to make predictions. A typical Wall Street guy does make predictions. I deal in probabilities to capture profit and limit loss. As an example, when we look at this chart here, if we break certain levels of support here, we will exit our long positions. And we've said for the longest time in 2009 that a top on the S&P is somewhere between 11 and 1200. So right now, looking at this chart, we have entered the 1100 area. Whether or not this is a top, we don't know. But the point is, we are prepared. We don't buy and hold. We are prepared to lock in profit and or limit loss. The typical Wall Street guy does not use stops. Speaking of stops, you guys, we always use stops. Whether it's ETFs, individual stocks, commodities, option, we always use stops. The goal is to be able to, again, capture profit and limit loss. When I manage money, your money stays in your name at a discount broker of your choosing. That's not the typical scenario with your average Wall Street guy. Most Wall Street guys are commission-based. We are fee-based. We have an incentive to perform. Most Wall Street guys are the herd mentality. Me, as an anti-Wall Street guy, you know what? We're a contrarian most of the time. When all the news headlines say that the market's going higher, people at the country club tell you to buy stocks, every magazine says that the market's going up, you know what? That's when we want to tighten up our stops or possibly short the market. Most Wall Street guys are over-diversified. What we do when we manage money, or you follow me and you manage your own money, we keep anywhere from 5 to 6 positions. As an example, right now we are long the SPY. Let's pull up a chart of the SPY. Okay, we are also long GLD. We are also long the Qs with tight stops as of this time. So my point is you don't need to be over diversified with a bunch of mutual funds where you can't put in stops, you can't put in limit orders, but instead you want to use exchange traded funds where you can put in stops, you can use limit orders, you can be diversified. If you're over diversified, you can't manage the money. That's why we use exchange traded funds. Typical Wall Street guy doesn't return calls. You guys visiting this site and all my clients that listen to me on the radio, you guys know that you have access to my cell phone number. Even on my business card, I give you my cell phone number. So again, you guys, I believe that we are in uncertain times. The old buy and hold is dead. The key is to be able to time the market and be diversified at the same time. Please join us. Again, thank you for visiting our site. If you have any questions, you can give me a call.
and sign up for one of our free trial offers for 3 weeks. Take care. This is Doug McKay, the founder of the Anti-Wall Street Guy and ProInvestorCoach.com. Thanks, and have a great day.